Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. Hope everyone is doing well. All right, so let's get to it. Let's see what we've got going on here this morning. What kind of mood is this market in after yesterday's sell-off? But let's not take it day to day for a moment. Let's not think about, oh, this happened Thursday and this is the beginning of the end. Let's talk about what we've actually got going on from a seasonal perspective. And let's see here. I'm going to pull up the S&P, and I'm sure a lot of you have seen me use this chart before. And am I not logged in? Oh, hang on. Let me log in here real quick because this is really cool data. And what I'm going to show you is over the last 5 years, what has the typical rhythm of September been? Now, the only reason I'm even interested in the seasonal is because July acted according to the seasonal tendencies. August most definitely did. We usually expect a lot of chop in August. And let's take a look at September. September, take a peek. We've chopped into the first 2 weeks. And then now as we get into the latter half of the month, so here's your entire month of September. Here's your first 2 weeks, right? Boom, boom. And then what happens the latter half of the month? This is pretty much seasonally in line with what we saw through July, which was straight up, what we saw through August. Now, here's where it gets challenging, gang. If you're using a process that was sort of very successful in July, right? It's very likely not going to be successful in August. And frankly, anyone can trade an uptrend. So always ask yourself, if you're testing a process, what environment did it succeed in? So if you have a really strong trending approach, it might have a really nice opportunity later on, probably into mid-October. If you had a process that worked really well in August, it probably continued to work really well through the first 2 weeks of September, right? And again, that July process would have been a nightmare. Now, as we're going lower, here's where if you had a trending process that was working really well, that's why it's so important to have a choppy sequence and a trending sequence. If you had a trending sequence that worked pretty darn well, it should work just sort of with the inverse signals now in September. So if you are able to trade July well, ask yourself, what did I do? And can you turn it around on its head? And those are things that I find a lot of traders may not think about. What environment did most of the profits come from? That is what it is optimized for. Make sure you recognize the environment that you're trading so you can pull from your toolkit the indicators and the strategies that did well in that environment. And you're going to find that as long as you have a trending approach and a choppy approach and you know when to use which, you'll be fine, right? So these are things that I think make a lot of sense and hopefully make you feel a little less, concerned, scared, panicked. If you are, if you're not, hey, you're taking advantage of a trending market. Fantastic. I think downtrends are harder though than uptrends. So if you say, Rog, do you like downtrends? As a rule, I used to, and that was before the central banks around the world decided that on their watch, there will be no significant moves to the downside for very long. And they've all stepped in to add liquidity, to change monetary policy, to message the market that central banks are also here to help support the stock market. And did the US central bank do that? Absolutely. In 2020, they did something that's never really been questioned. And it doesn't matter now, but it just goes to show the lengths to which they will support the stock market if there is a significant, I don't mean a little bit of a pullback, but if there's a significant move to the downside. When we had the Q1 2020 sell-off around the pandemic, remember the central bank, the U.S. central bank, allowed the Treasury to buy stocks. They bought junk bonds. And this was mind-boggling, the fact that this was something that was allowed to be done. But rather than judge what they did and whether they were really empowered to do it or not, let's just remember it tells us what they're willing to do. So it's tough to be a bear because we have these people that are controlling the rates and the dollars in the only way that matters, and they'll step in. So just something to think about. Just something to think about. And then also, let's also remember, and I'm going to show you this as well. A lot of folks ask me, Rob, what did Powell say on Wednesday? I'll tell you what, that I don't believe Powell, now that we know there's a seasonally weak September, I don't really believe Powell did this. This isn't Powell's fault. This is the stock market acting like the 3-year-old at tantrums in the grocery store that it is, right? There's nothing sophisticated and highbrow and intelligent about the stock market. Maybe the people who trade it, but the market itself is a perfect example of a person is smart, but people are dumb, right? There was nothing in what he said that suggested he's going to hike again. What he did not do, and this isn't his fault, he just really isn't ready to do it. He did not suggest that we will get cuts sooner. Consequently, the cuts, the expectation for them were pushed way out to July, right? That's what happened. So I'm not here to point a finger at Powell. He has a very difficult job. Communicating what they're going to do is tough because he can't pigeonhole himself. He can't say, yes, we will cut in March or May. No central banker can do that. But what they did not do is move up the expectation of those rate cuts. They used to be March 20 meeting to May 1 meeting. Now they're way out in July. So that's got to change. Otherwise, it's going to contribute to some of the weakness. But again, let me remind everybody, this is a seasonally weak time of year. Has been for the last 10 years, has been for the last 5 years, right? So this is very typical of September. All right, so let's get to our questions as always. The best part of our show. And what do we got here? Kicking the morning off. Hey there, David. Yes, caffeinate and dominate. Absolutely. I actually have a little, is it here? I have a little stir that says caffeinate and dominate on it, which I love. All right. What conditions will need to change to consider buy the dip or short the rip waves entries to follow through? So when can we start playing a trend is the question, right? And get follow through. So a lot of that's going to be predicated on the underlying structure. So let's just grab the S&P, for example. And here we go. And we'll take a look at the trend, the structure of the S&P. This is the S&P futures. By the way, if you trade the micro, if you trade the SPY, if you trade the SPX, this is the contract to look at initially. What we have here is chop, and it's been choppy since August. As long as that lower row of the multi-trend remains yellow, it's going to be chop, and follow through is going to come in fits and starts. And so until it starts to trend again, like it did. Now, why was June and July so easy? And why do I say if you have a process that was optimized for these months, it was easy? Well, because this is what we're looking for, right, David? We're looking for green trend. We're looking for green grab candles. We're looking for dips that are buyable, especially in the DPMRs, right? Up, 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 right? That's what I'm looking for. The green candles to sink into the gray zone. But that is not what we've got right now. So that's what's going to happen. That's what's going to happen. Now, can we do something like that on the 60? Can I look for short-term overnight exposure, say on a 60-minute chart? Yes. Yes. And instead of, I say 2 to 10 day type time horizon, it's more of a 1 to 3 day type time horizon. If you're going to trade the trends, follow the trends up or down on a 1 hour chart. All right. So next up, great questions. In the meanwhile, David, we're going to continue to day trade. And those of you that took the day trading class with me earlier this month, if you're looking for the HPMRs, if you're looking for the day trading class, if you're looking for the day trading indicator toolkit, I believe it's still available, right? So especially for those of you that are looking to extend your current HPMR subscription, do it with the class because it's included. All right. This is going to last until I believe next Monday. So until the 25th. So if you've been kind of thinking, yeah, Rog, I want to be able to day trade this environment. I'll tell you, and my members will tell you the same thing from the class. We've had very consistent day trading. Home runs? No. Singles, doubles, few triples here. Some of our traders had a home run in Amazon yesterday, but just getting on base, right? Like in that Moneyball movie. What does he do? Get on base. Remember that scene with Brad Pitt and Jonah Hill? Love that scene. What does he do? He gets on base. That's all we're trying to do. And my first losing day this month was FOMC Wednesday. I had a losing day FOMC Wednesday. I thought I was going to have a losing day after FOMC, which is personally challenging for me, but Amazon definitely pulled us out of the hole there. But the day trading, staying nimble, because the chop, as David was asking, has really, really been, again, getting in, getting out, looking for smaller time horizons. It just continues to work. All right, next up. Hey, thanks so much. Yes, absolutely. Smash that like button if this is a needle mover for you. I appreciate the time, of course. All right, Tech Trader Joe asked, will yesterday's price action change my pre-market thesis trade plan for today? I don't have a trade plan at the close of the previous day, Tech Trader Joe. My trade plan starts to formulate, when I get up. And I'll start to take a look at the Asian session, market structure, the way it closed, make some coffee, take a look at the U.S. Open around 7 a.m. Eastern. We are inheriting a green trend. So I don't have to get up and do all sorts of crazy homework. My indicators are already plugging away, assessing what's going on. And since about 8:15, you can see right in here, since about 8:15, all right, that's it. So my pre-market thesis is, what is the multi-trend doing, right? My pre-market thesis is, where are we in relation to key levels from the close? I mean, that's about the only thing that I'll carry over from yesterday, right? Are we above or below the previous session close? That's a great place to start. All right, next up. I like the way Walmart has held up so far. What are my thoughts on this stock? Hey there, Stanley. Yeah, so if we're going to look at Walmart, it's been a green trend. So when we're talking about those environments that are by the dippable, kind of going back to David's question earlier in the show, if we're looking for things that are by the dippable, Walmart would definitely be one of them. I would look for opportunities in the daily price movement range, which is the gray zone. You can see here, it's gray zone. I would look at it in the wave. This is the 34 EMA wave, and this is the 34 EMA on the high, the close, and the low, right? So this area could be a really nice, whether I'm being specific to the daily price movement range for the buy or to the entire mean reversion for the buy. It's a good zone to keep an eye on. Absolutely. It's a buy the dippable name. All right. Let's see. Next up is, hang on, let me check out what we've got going on in our Simpler Essentials room. Tom H asks, credible technician who has been negative, saying to cover shorts, going long today, next week, within the context of the trading range. Tom, I can appreciate the question. So here's my thing. Credible or not, I don't care what a technician says. And I'm sure in your mind, you're wondering, are they putting on the position? I don't care what analysts have to say. I don't care what technicians have to say. No one should even care what I have to say unless I'm putting skin in the game and I'm putting trades on. So I actually don't listen to television because those are people talking oftentimes with no skin in the game. I want to know, Are you long? See, that's my only question for that person. Telling folks what to do is very different than doing it themselves. I am a practitioner. You should only ever listen to me. Anyone out there should only ever listen to me because I'm putting risk at play every day, in front of a live audience, and so the idea is, um, I just want to know how they're positioning. And so any signals from my indicators that would be consistent or contradict that view. Um, what I'll tell you is this, Tom, I'm going to shorten the time frame. I'm going to wait for the bell to ring. When the bell rings, I'm going to take about 10 or 12 minutes to assess what the overall direction of the market could be. And then I'm going to ask myself, do I want to put risk at play? How could I manage it? Whether that's on a 5-minute chart, which is really what I like to do in the first hour, whether that's an hour time frame where it's going to be maybe 1 to 3 days, or whether it's a daily, like the Walmart question that Stanley asked. And I'm going to look for exposure of 2 to 10 days. Structure dictates strategy. I'm going to trade what I see, not what I think. And frankly, no one can tell the future. So if I'm concerned about chop, which I am, if I'm concerned about the seasonal weakness, which I am, until I start to see an oversold read on the S&P, I'm going to presume that we could see lower lows. But the fact of the matter is, Tom, I have no idea where the markets are going to go. I'm not here to pick a bottom or pick a top. I'll leave that to folks who are on television or credible technicians. You know what I mean? That's the way I look at it. I have no idea where the markets are going to go. All I can do is react to them in a way that is always rooted in reminding myself, if the broader averages are in chop, it'll likely affect the sectors. They'll be in chop, and it'll likely affect the stocks. But if I can find relative outperformers, I'm in business, right? So that's all I can contribute to that conversation. Whether it helps or not, my friend, I don't know. But that's the way I process the market. All right, next up, Tesla. Yeah, sure. Can we go over Tesla? It's in chop. I'm not a big fan of trading Tesla as a general rule. So remember, gang, start at the top of the food chain. Sector is in the middle, stock is at the bottom. At the top of the food chain is the index. And if I look at Tesla from that top of the food chain type of view, it's S&P or NASDAQ. It's weighted heavily in both. To XLY, consumer discretionary. Finally, to Tesla. The stock that's more heavily weighted in consumer discretionary than Tesla is Amazon. Ideal if they're both moving together. So if I go index sector stock, I want the index to be cooperating with the sector to be cooperating with the stock. And then, and maybe only then, will I consider Tesla. I think a lot of traders work from the bottom up, right? They've got their favorite stocks. They've got their favorite, whatever. My favorite stock is the one that has the index sector stock alignment. And so looking at something like Tesla, it's choppy. Would I mind to buy here? If it moves down into the daily price movement range, great. But I also want to remember that there are a lot of other names in consumer discretionary, and there are a lot of other names in the S&P or NASDAQ. So I don't want to have sort of a preconceived notion that I like Tesla. And if I do, I really need to do it from the standpoint of, is it the best example of strength at support, strength within the context of a trend that's pulling back? What are the characteristics today that I like that are better than the other stocks of its ilk that make it the focus of my attention? Why is that stock or sector or index getting my attention? So I'm always going to start from the top. Index, sector, stock. Yeah, I hope that helps. All right, let's see what else we've got here. I think that's about it. And I'm out of time anyway. All right, gang. So that's a wrap. I'll see y'all on Sunday. I haven't had a Sunday show in 2 weeks. We were kind of wrapped up with the class, and I was just sort of getting my bearings back. We should have our class, our top tier outlook show back on Sunday. I'll see you all then. Have a great weekend. Be good to each other. I'll talk with you soon.